This is FinTech Futures reporting from Cybos, and I'm joined by Richard Ullenius of CSG. Richard, thank you so much for taking the time out to speak to us today. How are you enjoying the conference so far?
It's been fantastic. It's actually our first time at Cybos, and it's been energetic, learning tons, and awesome to see a record attendance here this week.
Excellent, excellent. So I guess just to get started, would you like to quickly let us know a bit more about yourself and your role at CSG?
Yeah, so sure. Richard Ullenius, been with CSG for 16 years, led a variety of different businesses. Swedish, live in Stockholm, and today run CSG's banking business.
Excellent, excellent. So, I mean, to get started off, you recently spoke with one of my colleagues on the topic of digital modernization in banks and mentioned that those furthest along in transformation are customer-centric. What practical steps can banks take to shift from product-first mindset to a customer-first one? And what measurable outcomes are you seeing from those that do it well?
Yeah, that's a great question. So I think one of the things we've seen over the years, and I should probably say that CSG is specialized in helping companies transform in multiple different industries, especially in terms of how it serves its customers, whether they are consumers, whether they are businesses or any other type of institution. And I think one of the first things that we see in many industries is that when you start that transformation of that journey, is that you take a very product-focused approach. You think about who are we, what is it that we provide, and then you try to kind of build efficiency almost like through that and come up with what really becomes adjacent improvements. And what I think those who are really successful, what they do instead is take a customer-centric approach. So instead of thinking too much about who they are, what it is that they do, they really truly focus on the end customer, whoever that might be, and then build a set of capabilities to serve them. And I mean, if you in the banking space, if you look at what the main competition is happening here in banking, obviously with the neobanks and the fintechs that are coming in, I think that's a great example because they started out with thinking about how can I serve you? How can I help Paul or Richard or a company in their daily financial life, and started out with allowing us to have some simple services and then continuously growing those services and capabilities, not so much about, based on who they are, much more about what you need, what the anticipated requirement is that you have as a customer. So my recommendation would be to take a very customer-centric approach to the transformation and then build from there, which isn't easy if you're, you've been in business for 30, 40, 100 years, whatever it is, right? But I think those who are really successful and really good at this type of transformation, they take that type of an approach.
Excellent, excellent. I mean, many banks still lack real-time visibility when it comes to their cost to serve. I mean, what technologies or methodologies can help address this gap, and why is it so critical for profitability and customer outcomes as well?
Well, first of all, it's super important if you want to take a customer-centric approach. I mean, at the end of the day, again, whether you serve a consumer or whether you serve a company of some sort, right? You have to understand the total relationship that you have with that entity or that person, right? And I think that's one of the things that we are seeing a lot of the banks struggle with today, right? They've been building up a lot of the manual kind of processes, a lot of Excel-based type systems to support them. A lot of it is, of course, person-to-person type relationship-based engagements, right? And then supported with a myriad of kind of core banking systems, so on and so forth. But often it's very almost like stovepipe, so it becomes very difficult for the front line of the banks to support the customer in a customer-centric type of an approach. So I think one of the most important things that we're seeing today is to bring all of the different data sets that the bank have today and bring that together, clean that data, transform that data, and make sure that it's useful, actionable data that is at the front line, not in the back office, but it's something that's serving those frontline teams so that they can have an end-to-end perspective of the customer relationship. So I think that's one of the most important kind of like groundbreaking things that most banks that we work with today are going to need to do. And then I think once you've done that, you can then start to think about, okay, so in the past we've taken a very manual approach to servicing customers, and some of the retail side of the banks have of course come a little bit further with digitalization of the engagement, so on and so forth, than perhaps on the corporate side. But the end destination will probably be somewhere similar, which is you'll both have a heavy digital engagement with your customers, whether you're a consumer or a company, supported by human-to-human relationships where it's needed, right? So I think the second thing that you can then do once you have actionable and usable data that you've really cleaned and made ready for the front line, then you can start to instantiate some of the things that many banks do today manually in technology, modern technology, that will really serve two purposes. One purpose is, at the end of the day, you're serving a better experience to the customer. And the neobanks, even if today they've done most of the work probably onto the retail side in terms of attacking the traditional banks, I don't think they're going to stop there. I think they will grow initially into SME, and ultimately they'll grow further into enterprise-based financing and financial services as well, right? So banks will have to change the engagement they have with their end customers on the corporate side as well. And I think instantiating a lot of what they do today in technology to support that will also allow the client representatives, the client partners, to focus even more on the customer. So I think that's one of the most important things for the banks to do. But for me, it really starts with making sure that you have good data that allows you to see the total relationship with the customer.
And you've previously advocated for a what you call a keyhole surgery approach to transformation. How should banks identify their top product use cases then with that, and what technical challenges should they expect when connecting legacy systems with modern platforms?
Keyhole surgery, and I think there's another concept in here, right, which is that when you and it doesn't matter whether you're a bank or any other industry, when you start thinking about transformation, I think the first thing that most companies and people start to think about is, okay, I need to get rid of the old, and I need to put new modern things in place, whatever they are. And I think what we're seeing and what we've seen across most industries that we serve is that that's a risky approach that very rarely delivers significant value. And most often it also slows things down unnecessary. So what we normally propose instead is a layered approach to transformation, which is where you basically leave a lot of your existing systems in place because they are already today performing a function. So instead of trying to replace existing technologies and existing processes to some degree, leave those, add instead a data layer on top of your existing systems that can basically suck out the data that is being performed in those systems, clean and transform that, and then you add modern technologies on top of that, which means that it's more of a keyhole type of a surgery rather than a full-blown one, right? It's much faster, it's less risk, it's definitely much more cost effective, but most importantly provide value to the end customer much faster, and therefore of course also provides much more value to the organization itself at a higher velocity and a higher pace, which we all know today, right? I mean, these long drawn out transformation programs over years, they often stall because they don't deliver enough value. So I'd say my recommendation is to focus on a small number of specific use cases that are customer centric. Don't go and rip and replace your old systems. Layer around them, put modern technology in, but then pick 1, 2, 3 use cases that are really important to your end customers that you think you can be successful with. Focus on those first, deliver significant value from them, because then your customers will be asking you for more, and also the value case or the proof of value to the internal organization will be so much clearer.
Regulations like DORA shaping the industry as well. How do you see the regulatory landscape evolving, and how can banks modernize their tech stacks to stay compliant while also still innovating as well?
A fabulous question. Actually, I would say the kind of the shift that's going on in the industry right now means that you can actually be regulatory driven. Doesn't sound very interesting and exciting perhaps, but what we're seeing with many of the banks today, the traditional banks, is that it's a struggle to manage regulation, compliance and risk in real time. But with where regulation and geopolitics, etc., where we think that's heading, you have to be able to manage all of those three in real time, which means that you do need to harmonize all the data that you have in the organization. You do need to make sure that you can tap into that data in real time, and basically have it at your fingertips. And I think the kind of technologies that we are talking about here will allow you to see the total relationship you have with the customer. You'll be able to see how and the different activities that are going on with not just a particular customer, but with all of your customers, again, in near real time. You'll be able to see all of the transaction information that you've had with all of your customers and that you have, again, in real time. So you'll be able to have all data that will be necessary to take, I would say, proactive decisions about how to manage regulation, how to manage risk, and how to manage compliance, when I think in a lot of banks today, and not just banks, in other industries as well, it's a reactive thing. You're getting a question from a regulator, or your CFO, your head of treasury asks you about something, how are we managing risk on this, or what's the risk profile here? And you're scrambling a team together of really clever people with big Excels, and they need to spend 5, 6, 7, 10 days, sometimes 2 weeks is what we're hearing from banks, to get an answer together. I think by deploying some of these technologies we're talking about and creating these almost like integrated processes, you'll be having that data available in a single pane of glass in front of the head of treasury or something like that, providing that information proactively, which means that you can start to take actions and decisions ahead of time as well. And you can actually become not only proactive, but you can become preemptive in how you manage risk, regulation, and compliance.
I guess just to finish off here, I mean, traditional banks may never be challengers, but they can get closer than they ever have been before. I mean, beyond speed, what competitive advantages can they develop, and which emerging technologies should be on their radar at the moment?
I think this is an amazing opportunity for the banks to learn from other industries. We've obviously seen this type of a transformation, or this type of a competitive force, happening in so many other industries, right? Airlines, telcos, retail, so on and so forth, right? We've worked a lot with communication service providers over the years. I think there's a ton of kind of cross-learning that can go on between telco and banks. And I think 2 or 3 to pick out. One, already a trusted brand with so many customers, consumers and enterprises alike. Yeah, some of the customers, many of the customers might not see your traditional bank as the most innovative, thought-provoking, thought leader today when they compare you with perhaps one of the neobanks or one of the fintechs. But that trust that's placed and that relationship that's built up over years, decades, generations sometimes, as we often follow our parents' financial services organizations and banks, etc. I think that's one thing. The second thing is scale. So banks have obviously been built up, just like telcos have, to provide services to its customers at enormous scale. So I think that again is something that's very difficult for younger, perhaps faster, more startup-y type companies to do. So leveraging the scale is something that I think is absolutely critical as a competitive advantage. But I'll finish off with where we started, which is none of that is going to mean a lot if you don't take a truly customer-centric approach. Because at the end of the day, what's going to determine success, whether you're a big traditional bank or another type of a financial services organization, and whether you serve consumers or whether you serve businesses or both, at the end of the day is, can I not only meet the customer's expectation on me, but can I actually advance ahead of customer expectation the services that I provide, so that Paul all of a sudden gets new services into his portfolio that you didn't even think of ahead of time that you needed, but you realize when they become available that you need. Then I think if you can do that as a traditional bank, leverage your scale, leverage the relationships, then you're creating true differentiation, even in times when competition is getting tougher and tougher.
Excellent. Well, Richard, thank you again so much for taking the time out to speak. It's been a pleasure, and I'm looking forward to seeing what's next for CSG as well.
Absolutely. Fantastic. Thank you so much, Paul.